Hi there, this is Steve Miley, the market chartist for forextraders.com, and we're now going to take a look at the Australian dollar versus the US dollar and also New Zealand dollar versus the US dollar. These antipodean currencies retaining their underlying bullish themes against the US dollar, partially due to general US dollar weakness we've seen in here across the major currencies, across G10 currencies. The US dollar continues to weaken as the Fed are seen potentially shifting to a slightly more dovish stance from their more hawkish stance, maybe putting the rate hike cycle and the rate hike process on pause. However, there's also a solid tone to both the Australian dollar and New Zealand dollar, with the Australian dollar performing particularly well throughout this year and particularly well from May, June this year, throughout Q2 into Q3, through July, and then potentially on into August. So here for the Australian dollar, the push up to 80.65, the market close to this important swing high back from 2015 at 81.64. We see real risk into early August, early to mid-August, up through 80.65 to challenge that 81.64 level. And even though we're going for a consolidation phase in here, we can zoom in on the intraday chart. The market during this consolidation phase holding above supports here at 78, 76, 74 area, whilst very minimally above there, but more importantly, whilst above 77.84, we see the threat higher. Going to flip to the New Zealand dollar in here now, and even though the rally in here we've seen probably not quite as strong in some ways as the Australian dollar, we have pushed above this September peak at 74.85, taking out and neutralizes this whole rally in here 2015 through 16, and that leaves bigger picture threats still for further gains for the New Zealand dollar. Go to the even bigger chart in here on the weekly chart. There's the push above 74.85, and real threats up to these targets here now at 77.44 and maybe up towards 80.00 as we go through the summer, through August, on into September. Again, flipping to the intraday chart, yes, we've had a little bit of setback as we've gone into early August in here, but it's going to really only down through 71.98 would neutralize the intermediate term bullish tone. So we see that fully intact and look for renewed gains into August and then through potentially on through the summer into September. This has been Steve Miley, the market chartist, on behalf of forextraders.com, and I wish you a great trading day.